Hello, it's Jonathan Wellham of Rocklinc Investment Partners, and it's April the 26th, 2018. Well, we continue on with our series on the Rocklinc Partners Fund and also covering really the sectors that we continue to invest in across all of our client portfolios. So the idea is to talk about the fund, but also to give our clients an opportunity to understand better some of the individual holdings that you will see also in your investment portfolios. So the first slide there you see is a disclaimer, and that's always necessary in our business, and so you can enjoy that disclaimer for a few moments there. And then we're going to turn really to the outline of the presentation. We're going to talk again just a few moments very briefly about our investment philosophy, and then we're going to jump into the fourth sector in our series, and that's going to be in the manufacturing area. So just a couple of slides on the investment philosophy. First, the next slide just says a little quote there from John Maynard Keynes. I love this quote. Worldly wisdom teaches us that it is better for a reputation to fail conventionally than to succeed unconventionally. And basically, just copy everybody else. Well, we're not interested in doing that. We want to be unique, differentiated, but we must make sure that that uniqueness is rooted in a long-term opportunity and reality so that we can make good returns for our investors. On the next slide, it just lists our core investment principles. I just put that up again just as a point of reference. Most of you are very familiar with those principles. Great companies, understand them, hold them for a long period of time. And then the next slide just talks about our investment process, which is get down and understand the businesses and understand the industries. And it's really number 4 and 5 that we're focusing on in this series of tapes, this series of videos. And that is look at industries with above average growth and then look for good businesses within those industries. And that's really where I want to shift our attention now. The next 2 slides, which you've seen before, just outline the 8 main sectors, main industries that we're investing in. These aren't the only industries, but certainly this is where the majority of your investments are being made in terms of the different industries. So infrastructure, we talked about that. Financial, technology was the video that we last did. And then we're going to be talking about manufacturing today, and we'll come back to that in a moment. And then we also look at precious metals, healthcare, agriculture, and water. And we'll be talking about those last 4 in the next 4 videos over the next sort of 4 to 6 weeks. Okay, manufacturing. Let's just zero right in on manufacturing and automation, we call it, because a lot of the areas that we're investing in within manufacturing are tied to this long-term secular growth trend of automation and the internet, connectivity to the internet. So you can see here that there are 4 areas within manufacturing that we're looking at. Automation, and this is a critical driver of productivity and cost efficiency. And so, you know, the very best businesses are all about automation. And so what we're trying to do is actually buy some of the companies that create the automation tools, or actually manufacturing the automation equipment that other businesses are going to buy. The second area, connectivity and sensors. As things become more automated, as we become more electrified, if you will, when it comes to cars, then the need for sensors in all areas of manufacturing continues to grow at a very, very rapid rate, multiples really of GDP growth. So there's a lot of opportunities here, and we'll talk about that. Smart factories, those are factories that are completely integrated to the internet, are automated, very efficient, very effective. Low energy, they maintain a lot lower energy costs, which is critical, especially when you're dealing with an area like Ontario. For our clients, we're really talking about Ontario here in terms of our point of reference, and we have some of the highest energy costs in the world. So if companies are actually going to manufacture here, they're going to have to be really, really efficient. So companies that are doing manufacturing here focus on a lot of equipment that's going to drive low energy costs and low energy consumption. And then software. We talked a little bit about this in our last video, that virtually everything is run by software now. So we own a number of software companies. We talked a little bit about that in the last session. You think of Google, Alphabet is the parent company, and their whole software that's running some of these automated cars. You think of other companies, Roper. We mentioned Roper, which is a leading software provider and so forth, which we own. This is very important. And then some of these manufacturing companies are also involved in the whole software area. So the next slide, we just highlight 3 companies that are important to us within manufacturing and automation: Honeywell, TE Connectivity, and then Dow DuPont. So let's just talk about these companies very quickly, give you a quick overview, gives you a better flavor of where we're investing and why you should be enthusiastic about these companies in your portfolio. First, Honeywell. Many people know Honeywell. It really aspires, as we say on that slide, to be the Apple of the industrial sector. Manufactures critical products that enhance efficiency within buildings. Many of us have Honeywell equipment in our homes. It's very large in the aerospace industry and safety and chemical processing. Over half of Honeywell's 22,000 engineers actually produce software solutions, so very high margin business, if you will, and are tied to data analytics and this whole Internet of Things. When we talk about the Internet of Things, we're talking about everything being connected to the Internet. Not just your smartphone or your iPad or your computer, but also eventually your refrigerator, your alarm system in your home, your cars, everything over time is expected is going to be increasingly connected to the Internet. And it's a very, very cash flow rich business. As we say here, free cash flow and earnings have been growing at over 10% a year for the last 5 years, and we expect good above average GDP growth. So in other words, a business that can grow faster than the overall economy. And they, as we say back in terms of the bottom half of this slide, they're also pruning their portfolio of products, so they continue, Honeywell, to sell businesses that maybe are lower growth opportunities and continue to move capital into higher growth opportunities. So we really like Honeywell. We think it's a great long-term position to be in. The next company is Dow DuPont. We have some Dow DuPont obviously in our fund, and we have it in some client portfolios. And Dow DuPont's an interesting company because as you see in the slide there, the company was actually the result of a recent merger between 2 of America's preeminent chemical companies. And Dow and DuPont. That's why, again, you've put this company together, Dow DuPont. What we like about the company is it's actually going to, now that it's put those 2 companies together, it's now going to spin out 3 new companies. It's going to break into 3 companies. So what, in effect, what's happened here is you've had a merger. That merger has created the opportunity to create 3 separate businesses, all high growth businesses, and all in very, very important areas of the economy. So as we outline here, we're going to have a very large agricultural business, material science, and then specialty products. And so over the next year or so, that Dow DuPont will become 3 companies, and we think it's going to unlock a lot of value so that we have good upside in terms of stock appreciation. And then we'll analyze and look at the 3 individual businesses and decide whether we want to hold all 3 or whether we want to trim off some 1 or 2 of those businesses. We'll see. But we think it's going to unlock a lot of value. And within the Dow DuPont brand, you have some amazing technologies for material science. And we talk a little bit about that on the slide. Then the last company, which we've written about in our annual reports and our different quarterly reports, is TE Connectivity. And this is the leader in design and manufacturing of highly engineered electric connectors, sensors, and components, particularly in what they call harsh environments, which means high temperatures, high pressure, could be cool temperatures, freezing temperatures, anywhere where sensors are going to be put under extra amount of in terms of a load or a little bit more pressure, and are going to have to perform in circumstances and environments that are a little bit tougher. Why do we like sensors, connectivity? Because of automation, because of the Internet of Things, because of electrification of vehicles, everything from buses to cars to and so on. As things become more automated and electrified, then you're going to have massive increase in the demand for sensors and connectivity parts. And so TE Connectivity is one of the world's leading manufacturers in this space, continues to grow very quickly, and it gives us a real core position in this big, major, secular, long-term trend of automation and the Internet of Things and the electrification of many of the mobility devices that we have. So that's just a quick update in terms of manufacturing and automation. And so this is a sector that is important to us. All of our clients would have at least one of these companies in your own portfolios, if not two. And those are some of the reasons why we're investing in this space. So I trust that's helpful. Next week, we'll look at the very interesting sector of precious metals and how we invest in this space and try to make money and protect your assets in the whole gold, silver, and precious metals area. Trust that's helpful. If you have any questions, please give us a call, email, or stop by the office. Thank you very much. Bye now.